and welcome to Poseidon Live. Today we're going to be talking about how to grow your business without capital. So a lot of you might have a business that is not ready for investment or that are not looking for investment, but you still want to grow your business and you don't have the necessary funds or capital to do the expansion. And that's exactly what we're going to be talking about today. So just for those of you that does not know how Poseidon Live works, so Poseidon Live is basically a live broadcast. So we're live. If I stutter on my words, it is all on live camera. At the end of the day, if you've got any questions, you can post them on the comments. We will respond to those questions and answer them as we go along. And the next broadcast of Poseidon Live will be in 2 weeks' time, same time, every second Thursday at 12 o'clock. So the first point that I would like to talk about is to focus on your business strengths. So a lot of people, when they want to grow their company and they want to start improving their business, focuses on the weaknesses. In other words, they are not focusing on the strengths of their company. Instead, they want to try and improve their weaknesses. You see, one of the problems is if you do that, growing or expanding your business becomes very difficult. I think a better approach is to sometimes to go look at your business, analyze it, and see what are your strengths, what are the things that you do really well, and improve those even further. Because that's going to give you that competitive advantage. It's going to give you the ability to really expand and grow on that. And then the important thing is to take that strengths that you have and see how can I multiply this, make it more, and expand it even further to initiate business growth for yourself. And then one of the other things is also, it takes time. I mean, this is a bit of an exercise that you need to dig into very deep into your business and really try and pull it apart and see what are the real strengths and what are the weaknesses. So it's something that I think is a continuous journey. I don't think it's something that you do once and never again. It's something that you need to do on a continuous basis and remember to focus on the strengths, expanding that, building that out instead of just trying to improve the weaknesses in your company. So the second thing is that's very important when you need to grow your business and you don't have capital available is profitability. So your profit margins needs to be a little bit higher. When a business has small profit margins, it tends to be very capital intensive to expand that business. So what I would recommend then is to focus on the services or the products that you offer with higher profit margins and focus on those even more than the products that might be a little bit of an easier sell, but at the end of the day it takes up a lot of capital because the profit margins are lower. So it might be a higher profit, more difficult sell, but because of the profit margins, it makes it easier to grow and expand on the sales of those things without using capital. So then capital intensive businesses obviously require more capital, which is pretty much self-explanatory. And then you also need to analyze your business and see what are the things that consume capital in your business. I mean, is it stock that you're buying that ties up your capital? Let's say, for instance, you're a retailer and you need to buy stock to keep those stock at hand. That basically eats up your capital and makes it difficult because now you can't grow your business because it's tied up in stock. And the way that you can do this, and this is a very simple example, and I'm not saying that you should switch to a model like this, but it's just a good example, and that's what I want to show you here. At the bottom, this model here is called drop shipping. And it's an easy way for retailers especially how to not tie up their capital and stock. And this is the type of changes that you need to make when it comes to profitability in your business. So normally a client will buy from a shop and the shop will buy from a supplier or a wholesaler or a manufacturer. So in this case, they buy the stock comes here, it ties up your capital, and then only when this person comes, the cash flow comes in, and then you can start utilizing the cash again. Where with the dropship model, it's the second picture there, the client buys from the shop, but it never gets, the stock never goes to the shop, it goes directly to the to the customer. So the great thing about this is it means that you don't have to use capital, you don't have to get a huge capital inlay or funding or investment for your business, because the capital the money comes from the client first. You've got your money and then you pay the supplier that ships directly to the thing. And this is actually a model that's used more often than you think. Amazon, Takealot, a lot of these companies do exactly the same thing. They've got a platform, and people come onto that platform, they buy the product, they don't necessarily keep all the products into their warehouse, and then they ship the product directly from the manufacturer or the supplier to the client, where they never deal or utilize their own cash. So this is just a small example of how you can make changes to a business to not tie up your capital at the end of the day. And that brings us to the next topic, which is cash is king. You need cash to grow a business. I mean, if you're operating at a certain level in your business and you now want to increase your marketing spend to attract more clients, whatever, that's going to cost money at the end of the day. And some of these changes that we've just discussed and we're going to keep on discussing now is to see how this cash flow can be loosened up in your business so that you can utilize that to grow. And the important thing to understand here, it's possible to make a profit in your business and still have a cash flow problem. I mean, you can make an accounting profit and say, let's say, for instance, I'm selling a product to a person. Yes, it was a sale, but now maybe there's a time lapse between the person actually paying you. It means that the cash for that sale is coming only in 30 days or whatever the case might be. That causes a cash flow issue for you to maybe purchase inventory or stock or grow your business. So it's very important to know that cash flow is something separate from profit, and it's something that needs to be utilized in the short term, and it needs to be managed properly. So one of the quick tips that I would always recommend for somebody that wants to grow their business without capital is go to your suppliers, go to your service providers and the people that you utilize in your business and try and negotiate terms that you can pay them maybe a little bit later, 30 days, 60 days, 90 days. At the same time, shorten your terms. Let your cash come in earlier. Try and move to more of a cash business, but at the same time, so in other words, your inflows coming in, you quicken the time frame or the cycle of that, but at the same time, you also lengthen the expense time frame, which will then loosen up cash in your business. And that is exactly what you'll be needing at the end of the day to grow your business. And then I think one of the important things, and this is something that needs to be done regularly, small little things pile up very quickly. Go through your business, go through your bank statements on a monthly basis and make sure that there's no unnecessary cash flows. And ask yourself the question, is it possible this money going out now to maybe delay this in any way, or maybe spend it a little bit later, or not at all? So that's a very important and critical exercise at the end of the day. The very important thing also to consider is partnerships. Partnerships can be a very, very helpful thing. And I think at the end of the day, simple example, and once again, it's difficult to give an example that relates to everybody, but let's say, for instance, you're a car wash. You've got a car wash business and people come into your shop all the time. So one thing that you've got in common there is that all the people that come into your business, or the majority at least of them, has a car. They're car owners. So now my question is the next thing, is it possible you don't have to start a business in car insurance or car fragrance manufacturing or a retail business, but it is possible that the same clients that you're serving are also interested in other products that you can partner up with. You can go to a place and say, you guys manufacture air fresheners, let's stock those. I'm not going to buy it from you, but I'll put them into my shop. The chances of people actually buying that from you is very good because they're all car owners, and there's an additional revenue stream. But the important thing is it's an additional revenue stream where you don't have to tie up capital or put capital. It's not costing you anything at all. And this can happen in many, many things. I mean, at the end of the day, we're the world's first online accountant. So one thing that our clients have in common is that they all are business owners and entrepreneurs, like you that's watching this video as well. And the needs and the services, we're looking for it all the time. I mean, you need a bank account to do business, and that's why we've partnered with Sasfin Bank. You need legal advice. That's why we've partnered with Nyasa. So at the end of the day, that partnerships can bring an additional revenue stream that can then be utilized to grow your business and expand your business without having to incur any costs or make any expenses. I always say there where a lot of people gather, or even in today's digital age, where a lot of eyes gather, where a lot of people are looking. If you've got a website, and you've got a lot of people reading your blogs or whatever the case might be, one of the easy ways to monetize that is then to add revenue with Google AdSense or something like that, because a lot of people are coming or gathering there, and the people that are interested about that topic or that service might also be interested in other non-competing items that you can include in your business model. And be open-minded. I mean, at the end of the day, I think one of the biggest mistakes that a lot of businesses do when they're trying to grow their business or expand is they're trying to do everything. Don't. Focus on what you do well, and rather get partners that specializes in something else to come on board and help you grow your business. Another important thing is, and people tend to forget about this, is your track record. Your track record needs to be recorded in business terms. Sorry, just a second there. So it needs to be recorded in business terms, and that language that a track record gets recorded into at the end of the day is called accounting. If you do well and your business is starting to grow, or maybe you want to grow your business to a certain point to make it more investable before you can get funding or investment into your business or scale it even further, you can't do that without a proper track record. You need to keep your records and everything up to scratch. Make sure that if you now approach an external party that you want to include in your business or help them partner with you, you've got some facts on the table. Let's go back to the car wash example. If I've got a car wash and my car wash is doing quite well, and I go to somebody and say, listen, I can sell these car refresheners or help you sell these car refresheners in my business, it's a difficult thing to try and convince somebody if you can't go and explain to them how many cars is coming through, how much revenue is it generating, and what the type of expectation it can be. So this helps with partnerships. It helps with funding and investment at a later stage in your business that you might need in the future. And also helps with a lot of grants and government support and initiatives that you can also utilize at the end of the day. Remember, record your successes, even if it's small. Start from day one to record that so that you've got a good track record and you can use that as a negotiating tool to expand and make your business bigger at the end of the day. And then I think the most important thing when it comes to bootstrapping a business or building a business without capital, I think bootstrapping is one of the hardest things that you can do, and I think that's one of it's at the core and the heart of being an entrepreneur, somebody that's making a business work without all the resources and everything and the capital or funding, but still making this work. I think that's pretty much what an entrepreneur is at the end of the day. But the important thing is to understand that it is going to be a tough journey. It is not always going to go in the way that you want to, but it's important that you never give up by pursuing this. At the same time, Einstein famously said that if you keep on doing the same thing and expecting a different result, that is the definition of insanity. If you try something and it's not working, or you continuously try something and it's not working, don't do the same thing. Go back to the drawing board. Be flexible, but be tenacious. Be adaptable to circumstances, but don't give up. Keep on going and going and going until you succeed. Go back to the drawing board, change your approach, go again. Because if you keep on sticking with that and you follow the basic principles of freeing up cash flow, focusing on the high profits of your business, and really building and molding your business, and also work with partnerships like we've discussed here today, and you keep on going, your business will grow. And if you do it well, you build a very profitable business, you might never need funding and investment. That's the perfect place to be, is to never let funders or investors come in, and you build your business organically just by bootstrapping it. I think that is any entrepreneur's dream at the end of the day. So I think that's it. It's a nice and short discussion about it today. Remember, if you've got questions about this, please leave them in the comments. I would be more than happy to answer them. And also look out for our next broadcast. That's going to be in 2 weeks' time, so it's literally 2 weeks from today. Again, Thursday, 12 o'clock. We were going to be giving you some more business advice on how to build your business and how to expand and grow your business at the end of the day. Remember, that's what Osaren is all about, and if you need help with any of your compliance or any of your accounting or taxation or even business support, financial management support to help your business grow, you can go to our website, osaren.com. We're always looking to help entrepreneurs. Thank you for watching, and I wish you an amazing day.